Well, hello again, everyone. Welcome to the Options Mentor here on the last day of 2023. And what a year it's been for the market. Let's just start out taking a look here at the VIX. And look what the year the VIX has had here, all the way down here to pre-COVID levels of volatility. I really don't think that you need to have too much concern about it going a whole lot higher, or a whole lot lower, rather, the VIX. And one of the reasons for that is, primary reason for that, is look at the SPX. Of course, the opposite ran all the way up. Of course, when the SPX goes up, generally the VIX goes down. However, you've probably noticed lately that even with the SPX kind of trickling up here in this low volatility last 2 weeks of the year, the volatility, the VIX is maintained mainly firm. Sometimes we go down a little, sometimes even up a little. But anyway, folks, we are in a very low volatility environment, which makes Mark be a broken record, to be honest. All right, so now what are we going to do? Well, we got to go back to the well again. This just keeps working. And if it just keeps working, well, we're going to keep doing it. That's what you do in option trading. Sometimes I've encountered people and they'll go, hey, this has been working great. What else can we do? Well, hey, if this is working great, you'll find in the trading world, you want to stick with that because things work until they don't, right? So we're going to stick with the calendar or double calendar. You choose. I'm going to just model this one here. This is a calendar that you could put on maybe sometime Tuesday. As always, if there's some crazy calamity in the market and we come into Tuesday and we're gapping, up or down 50, 60 points, okay, hold off on things, folks. Let the market settle down a day or two if that happens to happen. I don't know why it would, but that kind of thing can happen, particularly on a holiday weekend. So when we get into Tuesday, just assuming things are around where they're at now with the market, not up too much, the VIX kind of similar, then I would be looking to put on a calendar. And you could do it for this Friday, the 5th. And then I would go out 4 days. I like going out 4 days because it gives you just a little more Vega exposure. And I don't think there's anything wrong with that because I'm not too afraid of us going any more than we could dip in the 11s somewhere, but that would be it. And I don't think it's going to do your calendar any volatility damage. So I would look to do this way, or if you want a little more of a, I guess you could say peaceful trade, that's fine too. You could actually go out and do the 12th, which is a week from this coming Friday, and the 16th. And you can see how much bigger it is, a little flatter. This is a lot better looking trade just looking at it on the graph. But the decay will be slower, right? The decay on this one is 33 bucks a day, where you have, I believe it's 73 a day on the one for this Friday. So either one of those is fine. I would put it somewhere around the money. In fact, one thing I would say, let's suppose we get into Tuesday and the market's still trying to run up, the all-time high at 48.18. It's really within striking distance. I wouldn't be surprised at all if it touched it. So what I've been looking at doing is wherever we're at, maybe put it on a little above where we're trading. So if we opened up at 47.70, or we closed basically on Friday, if in the market's kind of tilting up again, go ahead and put something 15, 20 points higher in this example, 47.90. You'll still be good going up. You can see here, you'll be good past all-time high. So we could punch through that, maybe make a statement of hitting something new again. But I don't think we're going, straight to 49 or anything. And I really look for us to come back. In fact, if we open up a little bit on Tuesday, I'd want to do this trade even more, right? Because I really think that we're going to probably start slowing down here, and we may even pull back. Now, if you really think the pullback's imminent or whatever, you could do it at the money or even below the money. So what I'm telling you is you can put your own feel into what you're doing in the market with your strikes on your calendar. You could be a little above, a little below. This just gives you a little more room on the downside, however you want to play it. And a lot of it will be, of course, what's the market look like on Tuesday whenever we start the day out? Are we still on the bullish uptrend, or where are we at? Now, volume, by the way, should start returning this week. Volume's been very low the last 2 weeks of the year. In fact, most professional traders take the last 2 weeks of the year off because the volume's low and they try to get everything done, particularly these big mutual funds with getting the books window dressed, so in 2024, they can say, hey, we were in this, we were out of that, because they took care of that here in December. And that's, called window dressing. And that's what they do here in December. But now we're heading into January. You can often get a very different market. You'll certainly get a market that has more volume. So anything can happen. But at this point, I'm still looking to stay long Vega, using calendars, selling this Friday, buying the following Tuesday, or selling a week from Friday, that's December 12th, and buying that following Tuesday. So I know we had a 2-week hiatus here. We won't be having another one here. So I'll be here with you next week, and we're going to get into 2024. We're going to trade these markets, and we're going to kick some option butt, make some dough. By the way, as always, I'd like to remind you to like the videos, subscribe to the videos, tell your friends, and also check us out over at SheridanMentoring.com, where I mentor people every day. We mentor people every day over there at Sheridan Mentoring. So I will talk with you next week. Have a great week of trading, and I hope you have a very happy new year. Bye-bye now.